And this is Stock Shots. Now, please remember, I am not a financial advisor. I'm just giving you my opinion based on things that have happened in the past. So always look to your left. The charts will tell you what may happen. And of course, do your own due diligence, aka your research. I'm just giving you my opinion based on support, resistance, supply, demand, and some other indicators that may be on the screen. So, with that being said, enjoy. And here's another episode of Stock Shots. All right, welcome to another episode of Stock Shots. So this week we are going to go over the TSP funds. Of course, we're starting with our favorite, the SPX, aka the C fund. So what we're looking at right now is a point where we are, I don't know, are we topping out or do we have a little bit more room to run? At this point, I think we still have a little room to run up. We currently are inside of a consolidation box right here. So what this means is that price action has not really moved from this one area. It is just staying in one area. So at this point, we are looking for it to continue up. I think it's going to do it. We had a little bit of a volume push. The volume wasn't great, but if you notice, this volume is still a lot better than this previous one right here. So I'm feeling like it is time to break this area. And one thing you'll notice is that we'll put a, here we go. So this right here, where this line starts, that's going to be a consolidation break, or this is where the last high was. So we're looking for price action to break that high. Okay, this is going to be our, actually just put this here, it makes it easier. Yeah, that's our resistance. Once we break that, hey, look, it is off to the races. We're going to go from where we are right now to at least 47.26, around that area. So we still have a little bit of room left here in the C fund for a run, a little bit further up, at least. Now, I'm never the kind of person that's going to say, do this or do that. I always do my own due diligence and watch the other stocks. Remember, the S&P 500 is made up of 500 companies. So if one of them runs, doesn't mean all of them will. So keep an eye on the major ones. They'll tell you which way most likely the stock will go. So let's go on to our next one. Next one's going to be the S fund. There we go, Dow Jones. So in the Dow Jones, are we looking at the same thing? We pretty much are. We have some areas here that are still waiting to be tested, and we're looking for a possible run up to 2017 area. I'm just going to be honest with you. If we can break what's going on right here, so if we can break this area that we're at, this resistance area right here is what we're looking to get out of. If we can break that, we have a pretty much a clear shot up until this area right here, which would be the 2017 area. All right, so that price action would look beautiful at the end of the year. So some people are going to be calling for a Santa Claus rally. There's no guarantee it will happen, but if it does, you know where you might want to change your funds at. And this is important because you don't really want to lose a bunch of money, but at the same time, if you look back historically, you're going from December to January, this is very possible with a Santa Claus rally, quote unquote, or with just the seasonality of what stocks will do at the end of the year going into the new year. But remember, I will give you a nugget. This is a really good one. Look what happens in election years with the stock market. This will be a very good thing for you to research. It may help you learn some things as well. So now let's go on to our aggregated bond fund. The aggregated bond fund is looking really sad. I'm not going to lie. It's still in a downtrend. So what I'm going to do is make this a little bit smaller. We can get a better perspective of what's going on. We are still in a downtrend. Now, what happened is this. We had a break to the upside. Now, what this is saying is that, okay, I've broken the trend, but now we have our price target was hit around $97. Our next move could be to the downside. Okay, the reason being is that this candle here, let's move it in so you guys can see it better. That last candle that printed, this one looks like a strong rejection candle. All right, because we have a big wick on the top, meaning price action started most likely right around here. Went, love going up, went up. Then it hit this area. It was a lot of orders here to sell. Now, those sell orders pushed the price action to the bottom of the candle. This could be a bearish look, because it does seem like if the stock market goes up, bonds will most likely go down. All right. People want to get their money working faster, so they're going to take it out of the bonds and put it into the stocks. Now, if this is going to happen, then this aggregated bond fund most likely will come back down. If it does, look for it to bounce off our trend line. We're looking at price action, and we're doing technical analysis right now. I'm looking for it to bounce off a trend line, most likely around this area of $95 if it does a bounce. Now, if it continues down, then my price target was most likely going to be right here. That's my next structure. That's $91 and 70 something cents. So just average it out to 92. Remember, this is not an exact science. You're not going to get laser pinpoint price action all the time. Look for areas around where structure breaks, where it consolidates, and where it's brand new. Okay? Now, our last one is going to be the international bond or international fund. My apologies. This is going to be good old-fashioned I fund. All right, so we're here in the I fund. We are still in this. Same as last week. We got two candles, same as last week. The international fund is looking like it's going to go in between those same areas again. So we are in between our range. We're almost at the top of it here. We're almost there. And that's at $74.44 or $74.40. It looks like we can hit that easily. So it looks like a lot of these funds are looking to go up a little bit more. Now, when they do, be wary. You may have a point where you have a pullback, meaning where price action comes back or retraces. So you may get to here, and then price may come back to here to grab more orders and then move further up to a price target that may be higher. So what you need to do is just watch and wait. Make sure you're ready for both sides. If it's going to go bullish, be ready. If it's going to go bearish, be ready. But have that sentiment in your mind. It may go up more. At this time, we are done. This is a quick episode of Stock Shots. We are all good for this week. Remember, always do your due diligence. Come back next week. We'll see you for another episode of Stock Shots. It's been good.